Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Ethereum, which is currently down 4.5%, which is absolutely insane. It's under $1,500 right now, which is even crazier to say. But we're going to be jumping into exactly where I think Ethereum could be going over the next few days, as well as the entire crypto market. But before we jump into all of that, make sure you guys go check out the Discord down below. You can see on the screen right now just how many trades our members have been winning, and all of those trades have been from simply joining the Discord and starting to copy and paste the trades that we're sending out to them every single day. It's absolutely insane. The results everyone has been getting is even crazier. Make sure you join up, start winning the trades with us. Now back to Ethereum. So yeah, I mean, it's not been a very good year for Ethereum, and overall the previous sort of 2 years haven't been that great. It's been a very big disappointment, especially in comparison to Solana and Bitcoin. Obviously usually Ethereum lags behind Bitcoin quite severely during a bull market, and what we usually tend to see is Bitcoin pump up extremely, like we saw in 21 where it saw a huge pump, and then it took maybe a few days, a few weeks for Ethereum to actually catch up, and that's when we got this sort of stage called the flippening, where it looks like Ethereum could actually flip Bitcoin in market cap. Now obviously that isn't the case anymore because of how much Bitcoin has outgrown Ethereum, but in 21 and previously to that, it always looked like Ethereum could flip Bitcoin just because of how much momentum it had. And really ever since 2021, all of that momentum has slowed down, and I think it's purely due to the fact that we've had narrative changes. Back then it was how great applications are to build on Ethereum, then we got the NFT craze, metaverse craze, everything like that, and it was all sort of tying back to Ethereum, whereas now the meta was sort of Solana and Solana meme coins and everything like that. We got a little Solana NFTs and stuff during 21, and Solana has just been really good at capitalizing on these narrative changes and sort of leading the way for those narratives. Obviously now Solana has also dropped down severely. We're down to $100 on Sol. It's insane. The entire market is crashing, and we're going to jump into exactly why that is in just a second. But I want to clarify, Ethereum is still one of the best coins to hold, still one of the best coins historically to just buy, hold, and sell whenever, just not now. So historically it is a very good coin. Now that being said, we did have a very nice short trade on Ethereum, which we got 75% profit from, which you can see on the screen right now. This was a short we took on Sunday. I even said in the video the exact trade I'm taking. I even showed my exchange and the trade, and yeah, we took that trade. We did take profits slightly early, albeit I didn't think Ethereum would close below the support, and that's why we took profits. But hey, 75% is still great regardless, and it was a very good hedge for our long-term positions and our spot DCA buys. Now I wouldn't be looking to short right now, simply because I think the worst of the worst has been seen, although we could still fall another 30-50% here. And the reason we're crashing so much, and the S&P right now has just absolutely flipped on us, if we go on to like the 1 hour here, you can see it's just been dumping, is because of the tariffs and the tensions rising between the US, China, Europe, all to do with the trade war. It is a trade war. It doesn't matter how the media puts it or how anyone else tells you. A trade war by definition is a situation in which countries try to damage each other's trade, typically by the imposition of tariffs or quota restrictions. We are literally in a trade war. Now that definition might get changed soon, but yeah, a trade war is essentially when countries are trying to damage each other's trades by implementing tariffs, and the US is trying to do that with China. Obviously China has been implementing tariffs for a long time previously, and yeah, it's causing a trade war. Now the market doesn't like it. We've gone into a lot of details as to why in previous videos. To quickly summarize, when we get these tariffs implemented, it causes other countries to implement reciprocal tariffs, which then makes it much more expensive to import things, which then makes the consumer have to pay much more higher prices, which then could lead to higher inflation, which then could lead to higher rates. But in this case for the US, they actually have lower inflation. Oil is down severely, food prices are down severely, and inflation is relatively low. So with the implementation of these tariffs, revenues should go up quite high for the US. The dollar will obviously weaken, the S&P and the entire stock market and Wall Street will weaken, but that will allow for the Fed to lower rates, and that's what Trump really needs. Again, there's many videos where we've explained it in detail, but yeah, Trump needs these lower rates. Once we get those lower rates, which by the way, during May we have an FOMC meeting for those rates. We have one in May, June and July, 3 back-to-back meetings. It's going to be insane. That's sort of time period, we're going to see a lot of volatility. And if we get those rate cuts, which we should hopefully get, Larry Fink, the CEO of BlackRock, believes we won't get 4 or 5 rate cuts this year. JP believes we will get over 3 rate cuts this year. So it'll be interesting to see. If we get 1 rate cut out of the 3, it'll just sort of blow over. It won't be any major news. If we get 2 for 3, that will be insane, really, really good. 3 for 3 though, that would be, extremely bullish. I think the market would instantly flip a switch and just start pumping. Not only that, it would obviously allow Trump a lot more leeway to actually negotiate on the tariffs in a much more, it would allow Trump to negotiate the tariffs in a much higher seat, as again, then lower interest rates means the US can borrow more money for a lower cost. And again, the US is a business at the end of the day. All countries are businesses, and for 2025, the US is predicted to lose $2 trillion. So they need to borrow that $2 trillion from the Fed, and that's why they need these lower interest rates. Now we've sort of gone on about the economical state and why everything's crashing. Let's actually take a look at Ethereum. So I've been saying anywhere under 2k is a great accumulation for ETH. We accumulated at 1.8, at 1.6, like 1.55 here. We're going to be looking to accumulate lower as well, constantly buying up Ethereum. We're probably going to go down to like 1.3k here if this dump continues, which it looks like it is. It's not the worst thing in the world. It allows us to DCA in more, which is very, very good, because once the market does flip, because it will flip, it's not like the market is just going to stay like this forever. So when it does flip, we'll have a 3.5x 4x maybe from where we've entered in at, which is very, very good. I don't think you'll get those sort of returns on the S&P. Say we enter in at the lows, which again, I think the S&P could fall to 4.6k, which from the highs would be how much of a dump? Let's check. That would be roughly I said 4.6k, somewhere around here, 25% dip. So yeah, you're going to be looking at what, 25% profit back up, 5% profit back up. It's not that comparable to the crypto returns you'd be getting, and that's why I think it's so powerful. I would still recommend to DCA into the S&P and a lot of other stocks. The opportunity is really, really great. And last week we actually had the highest amount of retail trade entries ever seen before in the stock market. It was the complete opposite to what happened during the pandemic of 21. During this crash, we had nearly no retail investors. This crash, however, it seems a bit different. So yeah, very, very interesting to see. Maybe retail is wrong again, and we're going to continue to dump a lot lower, which a lot of major hedge fund CEOs believe. But again, nobody really knows the complete outlook. It's just important to stay on top of the details with the tariffs, understand what's going on, and analyze the charts. Obviously right now everything is news based, and we're simply falling due to news. We're not going to find a support just based on a technical line in a previous support. But these areas are good places to find entries at. If we don't have any of these lines right now and we are just continuing to crash, you'd probably just be trying to DCA at like even numbers, 1.5k, 1.7k, 2k, 2.5k, and that's very, very inefficient. With these sort of lines that we have, from previous support levels, previous resistance levels, it allows us to actually dollar cost averaging efficiently. We know roughly where in the history we found some support. We can potentially find some more support there. It's where a lot more traders will be definitely entering, and it also allows us to dismiss a lot of entries. We don't have to DCA in on every line. We can just find the most important ones and the strongest ones as well to essentially DCA in that. So yeah, that's it for today's Ethereum video. If you did enjoy, please do make sure to like and subscribe. And again, if you want to be getting my trades sent to you every single day, then check out the Discord down below. Thank you all for watching. I'll see you all tomorrow. Please like and subscribe. Goodbye, guys.